The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 72. You get the NASDAQ NASDAQ's flat. S&Ps are down 7. Gold contracts up 350, trading at $12.50 an ounce. We have silver down 2 cents, $17.56. Platinum's down $3, $9.67. Light sweet crude down 56 cents, $47.69 a barrel. We get oil numbers this morning,
Wednesday,
10:30.
for sure.
Notes, 10-year note up 12 ticks, 124.21. 30-year bond up a full point, 151. Notes and bonds can continue to want higher price. And good old King Dollar can't handle higher price. Down 94 ticks, 99.520. We got the euro trading at 108, and the yen is down at, it broke 111. We're at 110.94. Yesterday, downdraft, finally got a 1% move in the Dow. That was the first time, it broke a record from, I guess, from October to yesterday. That's been the longest streak going all the way back to 1995.
Without going down 1%.
Yeah, I brought it up. I brought the
cool.
1995 one up. It was pretty amazing watching
We all
that
know it's been a straight line move since beginning of November at least, and there was just,
Yeah, pretty amazing. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here at TFNN, 12 to 1 Eastern Standard Time. You want to understand options upside down? Kevin, Scott, they got an amazing show. And if you haven't test drove the Thinkorswim platform, folks, it's very easy to do. You come to our website at TFNN, just hit the banner. They'll bring up the platform. You can trade with paper money on the platform. You can listen to Kevin, listen to Scott, put on some paper trades, and just see how vibrant, number one, the platform is. And, of course, what a great education you're going to get in the option market. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. How's everybody doing?
Doing good, man.
We get volatility, man. I need volatility. I like volatility.
Hold on. Temper that enthusiasm.
There you go. Get him in.
A VIX at 12 and 5/8 is not really getting my heart rate up just yet.
No, and that's even better. You know why? You know what? No, seriously. I sat here all morning waiting for a bounce, right? And we finally got a little bounce in the NDX 100. And that's what we needed.
Right.
You know, just to get everyone jazzed and say, okay, it's
Did you notice, Tom, how I said 12 and 5/8? I took you back old school there.
I did. I noticed it. I said 5/8. What terminal are you looking at, man? Yeah.
Hey, you know it's
Every
fun.
now and then I throw a little fraction at you.
And folks, let me tell you something. What Kevin's talking about, we have it absolutely made right now. Like, let's say in the option market, it would say penny wide. We used to get in trades and out of trades. So in trades in the 90s, the beginning of the 90s, you always will lose at least $125 just getting in.
Which is the eighth, right?
Yeah.
Right. On 1,000 shares or 250, right? Quarter was very easy.
Exactly.
I remember, quarter was very easy.
I mean, a quarter, if something was really moving, you have to pay a quarter. It was like, you got to be kidding me, man.
Tom, we joke on swim lessons that the first trade I ever made, I chiseled into stone tablets. So every now and then we like to remind everyone exactly how old I am.
It seems like that now, doesn't it?
Yes, it does.
For the change in the market, it seems like that.
Yeah.
I don't even know how I made money then.
I'll tell you where the changes have come, guys. I used to pore over data, like stacks of papers.
Okay.
Right? To figure out what the implied volatility levels are and where, what the historic numbers are. And now Thinkorswim customers can get that in 3 seconds with 2 clicks of your mouse.
I know.
And I tell people, frankly, it's a little off-putting to know that you guys get that so easy when I know how much time I've spent trying to find that stuff in my career.
And you know what's so cool about that? And this is so important, folks, right? That, you hear about program trading, electronic trading. It's important to stay up with it because if you're going to be in this business, it's going faster than people even realize.
Sure.
Oh, absolutely.
Which is really...
Right. We talked a lot. Think about this, Tom. We talked a lot on yesterday's show about SKU.
Yes.
And we were discussing SKU and all its facets yesterday. Well, SKU didn't even start until the early 90s.
Cool.
Wow.
It was really a product of the 87 crash.
That's so cool to know.
Some firms started to trade indexes versus the equities, and SKU started to creep into markets. So you had to, once you got to like the early 90s, 92, 93, all of a sudden you had to change the way you traded. Or you were basically trading options that relationships were different than they were.
That is so cool.
So
man.
that is right there as an example of you got to constantly be changing.
Yeah. Well, and when we brought up that chart when you were on yesterday, the longer term, the skew, that was pretty cool looking at that.
Definitely.
Right.
It's at those highs, yeah.
It's at those
highs. A lot of information to be taken from skew.
You can see it, man. You can see it. And that's the cool thing is that still plenty of people don't understand it. Which in the marketplace, folks, I find that's always great. I mean, unfortunately in the marketplace, you got to take the money from someone. So, it's our business, right? It's sad but true. So
not necessarily. It's not a zero-sum game.
A famous movie said it's the business we've chosen.
It's not a zero-sum game, though. Value's created. You don't have to take it from somebody.
I agree with that.
Yeah.
It's not a zero-sum game. It is if you're short.
Is it? If someone's winning, someone's got to be losing, right?
No, because value's created.
Value's created.
Nobody loses when the market goes from 1,000 to 20,000.
Tom, you're thinking of intraday trading.
Yeah.
And when you lose money, someone made that money. But Tommy's looking a little deeper into that topic, and
Gordon
he's
Gekko
actually
thinks
closer
it's
to right.
Gordon Gekko agrees. His speech, he agrees.
Right here, folks, 12 to 1 Eastern Standard Time. I'm in, Mr. Kevin Hinks, Scott Connor. Kevin, you have a great day, safe day, and we look forward to the show.
Can't wait, guys.
Thanks,
have a great
Hanks.
day.
Stay right there, folks.
Pezzamento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pezzavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 75. You get the Nasdaq down 3. S&Ps are down 7.5. So let's go take a look inside here. What's moving the market? You know what's interesting here too? Inside the Dow Industrials, the leader. I'll put it point-wise up here. So the leader right now is Visa. That's up, putting 3 points into it. Apple's putting 3. American Express 3. Home Depot 2. Taking away from it. That's quite a hit.
They had earnings last night, I believe.
Yeah, Nike down 24 points, taking 24 away from it. United Health taking 13, 3M taking 7, DuPont taking 6. There's some decent hits there. Inside the NDX 100, what do you have inside the NDX 100? The strength is Symantec. That's up 1.9%. Marriott's up 1.5%. Taken away from it, American Airlines. Now watch that. I got to pull this one up. American Airlines is only down $1, but it looks like it's going to be an ABC down. Taking out a B point, and yeah, it could get that volume pretty easy. If it gets more than 3.4 million, that's a pretty big ABC. That's 8 points, 48. The B is 40. 48 point what? 48 and 13, and 40, 21. That's a good one, man. $8 gets you $2, $6, $34 somewhere in there. That's intense. Let's see what else we got. Sirius Satellite, that's down 2%. You get Trip Advisor down 2. Let's go see what the IBB is doing out here. Yeah, so the IBB is going slightly lower. Okay, oil, right?
Sure.
Oil numbers coming out.
Pull this up. So we're looking at crude oil. We've got the May contract up. Looks like we're trading about 47.58.
Okay.
And 47.50 is a point that's going to line up for these 11 a.m.
Oh, that's going to be interesting.
Take a look at it.
Okay.
So it's about 9 pennies off. Not exactly on the spot, but definitely not too far away. So we have our 47.50 to the upside, and then our 47.50 to the downside. We buy in the positive ones, and sell in the negative ones. So you're looking at about $38, which would be 38 cents away from 47.50. The positive one is going to be $10 more because you have about $10 of intrinsic value in that one. Because it's about 10 cents above. So slightly bullish position.
Okay, let's see what we get then.
You can make your break even.
We're going to make sure the contract we're on too. CL.
We're looking at May on the...
May, okay. CRB, let me see what this... That's May, okay, so we're at 47.54. Oh.
This is slightly delayed too, I'm guessing,
Yes.
because when we just look back, it's about a 6 cent difference right now. We're at 47.60.
We're at 47.60. Oh boy, this is a close one. Look at this. So that's breaking the lows. Yeah, so I'm not going to do this because it's 10 cents to the bullish side, right?
It is.
And I'd be bearish on this right now.
Okay.
Even though it's above this swing point. Well, it's not yet. 47.71. You said it was 47.66, right?
What it was?
This contract. Yeah, so 47.63 right now it's trading.
Yes, yeah.
Yeah, so it already broke the lowest swing point today, and it has some good volume. So that characteristic is that baby can go right after there's another lower swing point on the left-hand side there that's quite low.
So let's just look at the possibilities that you could have on this, right?
Okay.
With the speed to do it, what's underneath here? 46, yeah, it's not going to really line up that well. I'm just looking, yeah, it's not going to line up. Let's see what's going on, because sometimes they can line up. What would you say? You're going to be bearish?
Yes.
Okay. Let me just see where.
So what we're doing is we're looking at longer-term contracts now, right? Instead of the 11, is that what's going on? I can't see that.
No, I just pulled up
okay.
11 a.m. still. I was looking at the different spreads, but yeah, let's go to 12. So 12 o'clock. I mean, ideally, you'd be looking for one where there's value to the downside in it, right?
Yes,
so 40,
exactly.
So right away, I mean, before I even look over here, I'm looking for maybe above this is going to be our pivot point.
Right.
So 47.75 or maybe 48, and this is what in 47.75. So now watch this, right? 47.75. So on the left side is our positive one.
Yep.
On the right side's our negative one. We're buying the positive one. No, I'm sorry, you're bearish. I keep thinking you're bullish. That's why I keep getting confused.
Yeah.
There's going to be value to the bearish side in this one.
Okay, cool.
Okay?
So
So the one to the positive side is going to be the one that's like 14 or 16 because you're
Yeah.
out of the money. We're still trading at 47.62, but the box at 47.75.
Yep.
And then the one to the bearish side is going to have the value at about 26.27. So you're looking at $42, slightly more expensive. You have till noon in these.
Right.
And this one, the pivot, is going to be 47.75. So to the bearish side, you already do have about 10 cents in value.
Okay, different ballgame then. So now I'm only needing 32 cents on the way down, right? It's a break.
This
even.
is 42.
Yeah,
Yes.
but I'm 10 cents in value.
You only need 15. So follow. These are the two numbers.
I got it. Okay.
You only need to make up the other side.
Yep.
So this is your bearish position.
Okay, so let's do a couple of each of those.
Okay.
So this would be the 12 o'clock one.
Exactly.
Yeah, perfect. So what I'm looking for, folks, is that I'm looking for the acceleration, and we can just go back to Bloomberg for a second, and I'll show you that swing point. What I'm looking for here is that, you know, we already broke the swing of 47.71. Now, right now, this is higher. It was 47.63 when we were just up looking at it.
Yeah.
But what I'd be looking for is a test of that level down there, which is 47.13 is the high.
Okay.
You know?
Yeah.
And it's possible that I could get a lot better than that, because if this is another ABC structure on the way down, get out of the way. That would be pretty intense. Because the A point on this would be 54.29, and the B would be 47.71. Cheap gas.
Yeah.
Cheap gas, here we come. So yesterday, folks, you know, bottom line is that you had the price spread, you had volume. Goldman Sachs is the canary in the coal mine. That thing just came down. Pretty amazing when you have a high-end consolidation like this, right?
Sure.
That you just look all the way back. Isn't that crazy?
Yeah.
December 7th.
Yep.
So you can bring that back to December 7th. For everyone that's in the gold market, you know, the GDX. Oh, I know what I wanted to look at here. This is the Gold Bugs Index. Let's see what the volume is. We're going to have that volume. I didn't look at this last night. Let's see. Let's see if we got the volume at ABC up. $26 million. Oh, 23 million. Just missed it. Okay, so we went up with 23, so you don't have an ABC up. We're going into 26.7 million, and we did 23 million. Let me look at the XAU.
Hold on.
XAU. You stay right there, folks. Tommy and I are coming right back. That's going to be... we'll be right back, folks.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's see. Crude inventories rose 4.95 million barrels, EIA said. And at this point, not much.
The estimate was 3 million barrels, to put that in context.
Okay, cool.
Yeah.
Okay, so not much movement yet. We're right at that 47.56 area.
Yeah. Theoretically, that's good for your position. There's more oil than they thought. There's about 5 million barrels. They thought there'd be 3. The price should decline. You had a slightly bearish position to start it off with 47.75 being that pivot point. So we'll see where it goes.
And then, of course, I get to 12 o'clock, too.
You do.
Which is a beautiful thing.
Definitely.
And if we do take a look at, here, if we look at the NDX 100 for a second, folks. So what you had out here this morning is that you had that NDX. And this, after a large downdraft, folks, okay, it's always kind of dangerous going the same way because it took so much energy to go down yesterday. So needless to say, all morning long, I was waiting for a bounce.
Sure.
And bottom line, it came in. And what it did, this thing came in pretty good, too. It came in, I guess, it was at 9:30, I guess. I was trying to get it at like 20 at 10, though. It was hanging up there for a bit.
9:40?
Yeah.
20 at 10.
And I'll show you what it was coming into. It was going into the downdraft from yesterday at 11:10. And, if you haven't traded that Nadex platform, you get volatility now, folks, so it's a whole different animal.
There's your moving oil.
Oh, and there's the moving oil. I get some action here all over the place. So in the NDX 100, what I did, and this is I went in for the 80-point spread.
Okay.
And now what gets interesting is this. When you get a fast market like this, I went in, hit, try to get 4 contracts, It didn't come across. I had to amend the order again. Couldn't get it. Had to amend the order
Sure.
again.
You're placing limit orders.
Yeah, 3 times. Yeah.
Yeah, I mean, you're placing limit orders, so
Right.
in a fast market, yeah.
Right, exactly. So keep that in mind.
Definitely.
But
That's why you always see us check your open positions and making
Right.
sure when your orders that they turn into actual confirmed positions for sure.
Right.
Yeah.
So what I got here, can you walk through that? There it is right there. 1 second, I got it.
Oh, okay. You already have it. You have the 2 same.
Okay.
So this is where the market is right now, right?
Yeah.
Looks like about 953 you got in. We'll close oil for the moment.
Yeah, it was right up there.
And there's the 950 bar, so
Right.
somewhere within that bar.
Right.
So markets, give or take, trading at about 53.50, 53.44, 53.45. Top of the box is going to be 53.80. So it's about 35 points below the box. And then dropping down to your average price, 53.44.50. So that was probably, give or take, right around where it was trading.
Yeah, it
at.
was.
Because you're risking 350 for a potential of 550 of profit. So,
Right.
as you, 450 of profit. So 350 for 450. I mean, it's going to be exactly square at market where it's 400 for 400. So you're barely off the middle of an 80-point spread. It's going to basically be trading like a future. Yeah.
Right,
Yeah.
exactly. So that's what I was looking for.
Sure.
So it's going to be intriguing to see. Now, and what I did there, folks, is this. The NDX, if you're going to trade either the NDX or the E-minis, yesterday, remember, what happened is that the S&P is what started it on the way down yesterday. Remember we were talking, I said this is unusual that is the S&P going to drag up the NASDAQ? Because normally the NASDAQ is the one that basically gets hit, brings it down, brings it up. So what I did this morning before I got into that NDX, I went over and the S&P didn't get the bounce that the NASDAQ did.
Okay.
So that gave me more confidence in that bounce in the NASDAQ.
Okay. Sure.
So it always gets intriguing when you can when they're both not in harmony. Because
Sure.
most of the time, you're going to have some harmony there. Oil. So we go back to oil, I guess, right?
Oh no, that's NASDAQ. Okay,
That's
close
NASDAQ.
that chart to not confuse things.
Okay, so close that one.
And then click on the little chart icon right next to oil. There you go. Oh, there you go. I think it's trading at 47.33 I'm seeing on the chart there. So again, 47.75 being that point. I think you get about $42, so 42 cents away from that 47. So you're at about break even right now where the
Okay.
market is. Yeah.
So I'd keep that on, though, because I'm bearish in the context of where I think that can go.
Let me talk about in those trades. If you get to move to the other side, maybe you take your money at a break even and look for the market to pull back. But if you're really looking for a downside move, maybe that's where you try and achieve, the full spread or $1 in oil or something, especially when the news comes in on your side as well.
Yeah, and you get volatility inside the market. Because if we bring back this for a second, you see, just as we're talking here, it looks like everything just had a quick little bounce.
Yeah,
NQ,
Dow's only down 50 now.
Yeah, right. So the NQs just jumped from down 6 to up 4. Right? We just did 53.15. Wow, hold it. No.
No, 53.15 is overnight.
Yeah. 53.28. Well, that's quite a bounce, man. Right? Yeah.
Yep. Yeah.
Let me get this closer. Yeah, that's a bar. So we just went from 53.28 to 53.44.
I know, unfortunately. Jump back to that NADEX because that's going to be a different world in the span of 5 minutes.
It is going to be a different world. I was up like...
You're up 400 and you're going to be break even to minus right now, I think.
Right. Where am I?
So again, let's close oil. Okay. Yeah, market's at 53.44. What's nice is they have everything right up here. So I want to see your open positions. Boom, there you go. And yeah, your NASDAQ is just a break even. So, with the 10-point move in the NASDAQ, when we were just looking at it, it was at 53, about 34.
Right.
So that 10 points is going to be about $100 per contract, and that was your $400 of profit for 4 contracts. So,
Yeah, it's $40 a point with 4 contracts.
Correct, right.
Exactly.
Yeah.
The cool thing is, folks, that guess what? Day's not over, but I wonder what's going on here because we got a nice little bounce happening. So that's moving up. Let's go into the E-minis. And this is now what you have happening here, which is going to be pretty wild, is that you're going to have more than likely a two-way market here, which is really cool. So the E-minis just went from 23.32 to 23.39, and that's the one you're going to keep an eye on, man. Because if that can't break the 23.41, that'd be a problem child. We go back to what is moving. Let's go see what's moving inside this NDX. See, Marriott got a good bump yesterday, too. Marriott was one of the only stocks that were up yesterday. I had some juice up there. Excuse me. Symantec is up 1.7%. Micron's up 1.6%. IDEX Pharmaceutical is up 1.5%. Our phone number is 877-927-6648. Right now, you get the Dow down 36. NASDAQ is up 8. S&Ps are off $1.50. You got gold up 240. Right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's down 30, Nasdaq's up 8, S&Ps are off 1.5. And if you come over to our website at TFNN, folks, you're going to see on the right-hand side the Everbank banner. And the way this dollar is reacting, folks, I'll tell you, and we'll get into that in a second, but, you know, the dollar is just taking out a small swing point intraday.
So you'll see, I was talking to the fine people of Everbank yesterday. They are extending this, which is awesome, 1 week. So it says act by March 23rd, and they're extending the funding deadline to March 30th.
Okay.
So pretty cool, right? This is, and let's get the exact name, Market Safe Core Commodities CD.
Yeah.
So you're looking at sugar, gold, WTI oil, and copper. The 4 equally weighted commodities, and you have an unlimited upside payment at maturity if the components increase in value across semi-annual pricing dates, and if they decrease, you're covered 100% protection. FDIC insured up to, I think it's the standard is $250,000.
Yes.
That you're covered for. And so these say, just so as you go over here, March 23rd, but that they just extended it. We sent out an email today that people may receive just with a link that you did that awesome interview with Chris Gaffney last month, where you brought him on for the full hour. So I was checking out that interview today as I was putting together the email, and what's remarkable was, and I'm gonna, maybe that email, it was late February, so maybe February 23rd, 24th, somewhere around there, and you guys were talking about the Fed coming up in March. And you were talking about the Fed futures. What do you think the Fed futures were at? If people get a chance to check out that interview, see how things changed so quickly.
Were they at 39?
They were at like 39, 35%.
Wow.
And it was a great conversation, but I was like, you know, and of course we all knew how fast they changed, and we talked about it, but it was like, wow.
It's different seeing it.
Wow, in terms of that was late February, and you guys were talking about the March meeting, and the Fed futures were just completely away from where they would have been 3 weeks from then.
Exactly.
Pretty cool.
And so the way this works, folks, is that they price them twice a year, and as Tommy just said, there's unlimited upside, and you can't lose your principal. So if you're a CD buyer, this is a great way to.
They're 5 years. And so, you know, literally the only downside is your money's tied up for 5 years, and you have the opportunity cost that you might have been able to get in a guaranteed CD, whether that's 1.5% right now.
Exactly.
That opportunity cost. But beyond that, your principal's protected, FDIC insured. I tell my friends about these products. They're just great, man, and people just don't know they exist. And especially, right, if you're bullish any of these commodities right now, and you're in the CD market, IRA eligible, great product, man, for sure.
Right.
And I'm sure we'll have Chris Gaffney on here back again, and it'll be amusing when you guys get to talk about the last time you were on and just those Fed futures, because I was pulling it up and I almost did a double take. I was just making sure it was the right interview.
And their phone number, folks, is 855-750-4051. That's 855-750-4051. So check it out. You know, and now let's go over to the dollar, because watch this. Intraday, what's just happened here, folks, is that the dollar just broke a B point of an ABC structure down. And it's been building cause to do this, okay? So watch what we have here. So your A point on this is 100.120. Your B point is 99.460. So that's what, 540?
660.
660. Okay, cool. Let's see. And then you see, oh, look at it's gonna is
720. Let's call it. So
yeah, so
660 over that. It's gonna be like 99.08.
Yeah. So you know it's gonna be crazy. That is right. It's gonna be like right at the swing down here. That's 99.145. Right.
So right below that.
It's that close. Yeah. So we'll see. We'll see how this shakes out. You know, whether it's gonna go right down after that. Right now. And you can see the 99.145, there's not much holding. Well, if it breaks there, then you got the 98.830, but realistically, you know, you're right down at the next swing point. That'd be pretty intense.
That's below 97 for sure.
It is. It is. You know, there's no doubt. If we go back over to the market again, what you're going to see, now this is a, to me, this is a typical market that you get the volatility going both ways. If we go over the E-minis again, what you're going to see is that you got the bounce going right back up to where we were this morning, and who's ever selling up there, you know, it almost made it to the, made it to 2342. Yeah, you made it right to 2342 again. You know, now the question's going to be, okay, can it bust it back down again?
Sure.
And then if we go into the NQs, it looks like it's going to be the exact same setup too, which is really going to be wild because this is where the so the NQs, the first get-go got you up to 53.53, and right now we're at 53.47. It looks like we made it to 53.51. You know, so this is going to be quite a day out here. Let's go back up to the oil market, because the oil market looked like it was getting a bounce also.
It's right there.
Yeah, okay, so that got a little bounce, but came right back down the other side. So we're at 47.38. And we still got the noon.
Yeah, you're approaching break even again. 47.75 is your point you're away from.
And if I go look, let me go look. You know what's intriguing here is that ExxonMobil, yesterday when we were going down so dramatically, even at the end of the day, Tom, Exxon and Chevron weren't down much.
Okay.
So it's almost like, hey, these things are ready to bounce.
Okay.
You know, so
they've gotten pretty beaten up recently.
Exactly. No, exactly. And yeah, Chevron's dangerous here. You know, because you're right in the. I can't stand these things when they're in the middle. Like it's like, okay, you know, when I say in the middle, the lower channel is like, well, support is like 100, and the big one's 119 and 107. It's like, okay, you wake up in the morning, you can jump out of bed.
Definitely.
Exxon though, kind of was setting up pretty nice. Now, I wouldn't be buying it, but I was thinking about it this morning.
Okay.
I was looking at it. I says, you know, because what happened, folks, because this would not go down yesterday, it's like, hey, you know, this could get a bounce. Now, this morning, Nike is getting killed, man. And they only missed by a small amount.
There's a lot in those releases, as it's not all about that, whatever your top line.
Yeah, you know, so Nike gapped down, folks. Oh, look at that. It's been down for quite a while. Interesting. Topped out in November of 2015. Comes up. It's going to go after that $51 now. Pretty amazing. Our phone number is 877-927-6648. If we take a look at some of the higher volume stocks in this market, it's going to be intriguing to see whether we get any volume too today. Bank of America's up 2. You got look at Snap. Snap's up $1.18. Rest of them are pretty tame, actually. We go into let's go into the XLF fell apart yesterday, and that's an indication that this market wants to go lower too. That came down hard. Look at that, 192 million shares.
Yeah.
After making a high with 92 million, bringing it all the way back.
Same date as Goldman.
Yeah. To December 7th.
Sure.
That's and where I'm looking for all of these to go, folks, meaning the financials, are right the last time we had volume on the way up, and that's going to be so. Your benchmark out here for a lot of these equities is November 14th. It's going to be pretty wild watching it. Let's go to now U.S. Steel. See, this came down hard yesterday too. That brought it all the way back into December 5th also. You stay right there, folks. Tommy and I are coming right back. Dow right now is down 54. You get the NASDAQ up 6. S&Ps are off 3.5. We have gold up 220. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tommy O'Brien, Tom O'Brien, we do appreciate you growling and prowling with us out here. Right now, you have the Dow down 40, Nasdaq's up 12, S&Ps are off 1.5. Let's go over to that yen, because what you're going to see out here, now this is really cool in the context of looking at the dollar, looking at metals. The yen broke down. We broke that swing point of 111.60. You're at 110.89, and guess what?
Middle of that range like you were talking about, right?
And there's nothing to stop this from going down to 105.53.
Yeah.
That is scary.
Basically the election.
The election.
It
yeah.
is.
And what happens, folks, is this. When you go up this quick, once you break, you can get down this quick. Because there's nothing. You know what's so funny is that when I remember first saying, okay, what is support, what is resistance, I got the equation of like just building floors like in the city with apartment buildings.
Sure.
Because then it totally makes more sense. If you just go straight up, well, when you're coming down, you go straight down. When you've built something, it's a lot harder because you have buyers and sellers there,
Sure.
right? You have a market there.
Definitely, right.
And in this particular case, folks, guess what? There's no market there. So that's pretty intense. And then, this is where you can, and if we go over to the Nikkei, you can see last night the Nikkei, it wasn't down huge, but you're down $400. Well, that's pretty good.
Yeah, that's it's at 19,000, which is pretty close to our Dow at 20,000. So if we had a 400 point day,
right.
it's actually even more dramatic because we're at a higher level. So it's percentage wise. If we had a 450 point day, that kind of puts things in perspective.
Sure. Yeah. And it looks like let me see.
We only were down 230 yesterday, and the streets were full of bears.
Thought it was a lot.
Exactly.
Yeah, right. So, and this had an expansion of volume. We did 1.3 billion. Slight expansion, nothing huge.
Yeah.
You're going into 1.2. So this is going to go into the lowest swing point more than likely tonight. 18,000. Well, the highest swing point first, 18,941.
Sure, only 100 points.
Yeah. So that yen is going to be something you want to keep your eye on in a big way.
Let's take a quick peek on oil before it. Now, keeping in mind, usually we're checking on this as we have about 3 minutes till expiration. It's nice as you have an hour and 3 minutes until expiration on this trade.
Right.
So we'll see.
I like that.
Yeah, it's hanging kind of right around break even. You got about $39 right now value. I think the two combined contracts cost about $42.
Yeah.
Yeah, and you can see here the two contracts here, positional value, and of course all the values to the one to the downside. But yeah, you're looking at almost $80 in value, and that's where you had about 42. That's almost basically what you put up initially.
Right.
Yeah.
And the NDX 100, I kind of like where that is too. We're up $10 right now. I suspect we're gonna be bouncing around, flat, down 5, up 10 for the next hour and a half here.
Yeah, and we're right back up to that point as you were talking about.
Right.
From earlier this morning.
Exactly. And what is interesting here is that the correlation of that dollar taking that B point out. I like that correlation because that would help me in the context of, I believe, where the market wants to go. Because at this particular point, folks, the market does not like the dollar going down. That correlation's been pretty direct. So we'll see where the whole thing shakes out. And I wouldn't. That's one of the targets saying they were closing their gold short position. It's probably pretty smart at this point, just because of the fact that gold really hasn't moved as much as it could move with the yen getting croaked right now. Yesterday it took a while for the gold contract to move. Right now 230 is nothing.
Sure, yeah, definitely.
You stay right there, folks. We got lots of great programming coming up for you. Dow right now down 40, Nasdaq up 12, S&P's up 1. Thanks, pal.
Thanks, man.
Wow! Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.